We saw gold under some pressure late last week. How will it fare this week? We have Gary Wagner starting things up for us next. Gary Wagner joins us now from Hawaii. Gary, thanks so much for being with us.
My pleasure as always. How are you today?
So as I mentioned, Gary, I'm happy to start the week with you since we did see gold under some pressure late last week as the US dollar index rallied, and we'll get to that in a second. But first, I'd like to start by speaking about stocks. We had our technical analyst Jim Wyckoff on last week, and he was suggesting that the top for stocks is not far off. So A, I'd like to know, Gary, do you agree with this? And B, what could it mean for gold?
Well, first of all, I really respect Jim's work. He's an immaculate technician, so I'm sure that he's got sound data and assumption that he's working on. The beauty of being an analyst is we don't really know. My sense is that because we had a report last week that came out that said that the manufacturing sector is in a better state than it has been in the last 2.5 years, I think that that bodes well for stocks. Businesses are growing. Employment is another issue, but in terms of the bottom line and profits in businesses, they have been doing well. So we could see a top, but I myself wouldn't hold my breath for it just yet.
Not holding your breath. Okay, Gary. Now let's look at some critical support levels for gold. I know that's what your insert will be on, but what are some key numbers that you're looking at right now for the metal?
Well, when it hit the upper level resistance of 1330 and failed to take that out and came down last week, that was a signal to me that even these last rallies we've seen, I'm speaking about 1181 up to 1435, although it was a tremendous move, it was still a bull rally in a bear market. My sense is that unless fundamentals change or the way we interpret the fundamentals, I think that we could see further downside pressure. Now, I am looking to see how the market reacts at 1306. Intraday low, I believe, on Friday was around 1306, and it did pop back off, and it closed lower, but that's a pretty critical number. If we can hold the 1300, we really have to take out 1331 to 1335 before I could really get bullish again.
Gary, it's interesting you mentioned that since you're not the first analyst to suggest that we could see a bottom for gold, some suggesting that we could see one second week of December. Can you see that far out?
Well, I typically, the studies that I do not take time in as much as price movement. So what I look at is how a market reacts when it hits a certain point. And 1306 is a very important Fibonacci retracement number for gold. If it can hold above there, as I said, I would look for a base to form, but it really has to move above 1330 for me to get bullish.
And we'll get to your insert in a second, Gary, but this week's a big week. We have ECB, we have jobs. Can we expect a lot of volatility?
Well, there's always the opportunity for volatility anytime you get these reports out, but my sense is right now that jobs aren't going to look great. The jobs report, I think, will come in weak, first of all, and I think that we'll see increased volatility, but I think that the direction of gold has kind of been etched over the last couple of months as we've seen it really slide down off of the $1,400 mark.
Actually, Gary, just one more question before we get to your insert. I know you don't track the PGMs, but a lot of folks I've been speaking to are bullish on palladium. Any thoughts on this?
You know, I do watch them from time to time, and I've been watching platinum really spike over the last month. Car sales are really robust in the United States right now. I believe that they're pretty strong in China right now, and in Europe they're okay. Palladium is such an essential component for the automobile complex that if we see a robust auto industry globally, you're going to see demand for palladium and platinum really go up, and that could have something to do with it.
Gary, let's get to your insert now.
Okay. You know, over the last couple of shows, we have been taking a really hard look at basic trend analysis, the different techniques you use to identify trends, talking about channels, Fibonacci retracement. One of the things that we talked about was the fact that we saw, and this of course is a very short-term chart, 240-minute chart, we talked about the fact that when we created a upper level resistance line, which is simply looking at the tops in the market and then extending that forward, that we absolutely saw a breakout in the marketplace itself. In fact, our last trade, we were long roughly, I believe, at 1332. However, we did exit that trade at about 1352 to 55, and there were a couple of things that gave us some solid indications that we could be looking at a potential top in the market. And for that, I draw your attention to the daily chart on the right, and I'm referring to this daily chart, the upper chart. You can also see the resistance trend line that we're talking about on this weekly chart. And once again, it's simply a matter of drawing it from the highs in the market. Let's go ahead and blow up our daily chart. This is roughly placed, but the key that we're looking at right now is the fact that when we simply look at these series of tops, we're getting consistently lower highs. We talked about the fact last week that this was our real indication that we were absolutely in a bear market, because for it to go from bear to bull, we really needed to see a breakout and see a breakout above this resistance line. And of course, that isn't how the market unfolded. The resistance that we identified proved to be insurmountable, and the market did come down. When it came down, though, it did make a higher low as compared to the 1181, which is after our long drop from 1800. The place that it hit the low was fairly significant. It is a fib number. Time permitting, we'll go ahead and explore that. But as the market came back up, we talked about the fact last week that we're probably going to see lower pricing, and the fact is that if it can't make it above this long-standing resistance line, we were probably in store for prices to move back down. And that's exactly what we saw in trading last week, as we saw the market give back much of the gains of this most recent rally. Now that we've seen downside pressure in the marketplace, my sense is that it will probably move to the support level that we have identified by simply putting in our trend line from these series of lows here. So what we're really getting is a compression triangle in which the range compresses or tightens, and the theory behind a compression triangle is as it reaches the apex of the triangle, it will break, and it typically breaks to the prominent direction of the trend, I should say, and it breaks with a lot of energy. That being said, I am looking for continued downside pressure right now, as we were unable to take out this resistance. We now have this support that is coming in, and we are also getting much closer to the apex of the triangle. And so what that really makes me believe in terms of a model is we probably will see a testing, the market go back, dip back down to this particular area, or the support area, which is just under 1300. 1292 is an important number, and 1276 is an important number. But we're really going to get a tell of the tape, a really critical piece of information, if in fact the market goes below or to the support line, whether or not it breaks below it. Because if in fact it breaks below this current support level, it is really following in suit with our current model in terms of our Elliott wave count. Now, let's take a look at our Elliott wave count in two different charts, a daily as well as our 3-day chart. Let's start with the 3-day chart, because what that really gives us is really the big picture, or the big outlook of the marketplace itself. Let's go ahead and line that up. Now, we have really our major bull market run, and that of course transpires up till really July of 2011. We hit our record top, and then we start with a normal correction in the market. In other words, an ABC. We have our A, our B, and then our C, and then it appears as though it's going back into an impulse phase. Impulse phase meaning that we're looking for our series of 5 waves up and 3 waves down, this being the impulse right here. It appeared as though that's what we were witnessing. However, that wasn't to be the case, because we hit at this point a double top, and we really went into our bear count, which I have as 1, 2, wave 3 takes us to the 1181, 4 takes us back up to 1435, And my belief right now is that what we're probably witnessing is the final drop, or wave 5. And wave 5, depending on where it terminates, will determine how we label it. If it terminates above 3, it's a truncated. Around 3, it's a flat, and a typical zigzag would have a lower low. So what we have seen so far in terms of a subcount right in here is something of the nature where we've had 1, 2, this is probably 3, and then we'll get a 4 and 5, and that will conclude a 5th wave, which is all a part of this corrective action. So that's what our Elliott wave count looks like in terms of a longer perspective. If we go to our daily charts, this is where I have been plotting our daily activity in the marketplace itself. This is that long wave 3 right in here. It terminates at 1181. And I believe that wave 4 was composed of an A, B, C. And of course, you can then subdivide these up. 1, 2, 3, 4, 5, A, B, C, and so forth. 1, 2, 3, 4, 5, and then we get to the top. And so my sense is right now that within this wave, we had a long wave down. This is 1, as I said, 2, and we're currently looking at 3. And that's how you would look at it in terms of looking at it in a daily or an intraday chart. So in a nutshell, that's my overview of the market. And for those chart disc viewers that are interested in diving into this topic a little bit deeper, I have 2 suggestions for us. The first one, of course, is we will make available some exclusive Kitco bonus content. Simply go to our website, thegoldforecast.com. If you scroll down to the bottom of the screen, you'll see this copyright right here. If you go ahead and click that, that will take you to the sign-up page for Chart This after the show. But there is another way to get more detailed information. If you go ahead and you click this copyright, it will take you to an exclusive offer. And this exclusive offer will allow you to view and get the daily report at an extremely discounted price so that you have this information on a daily basis. Again, Fibonacci retracement, trend analysis, Elliott wave as it pertains to the gold market.
Gary, thanks so much for that. And I'd also like to invite our viewers to check out your older material. You do inserts for us every week. I know how much work goes behind them, and it's such a wealth of information, so thank you.
Thank you very much, and I'm glad that our viewers are getting value out of the series that we bring to them, because that's what our intent is.
Absolutely, Gary. Thank you so much, and happy trading.
Have a great day and a great week.
And thanks so much for watching this edition of Chart This with Gary Wagner. You can email us at newsfeedback@kitco.com or tweet me at Daniela Camboni. Thanks for watching.